Welcome to this video. In this video, I'm going to be doing a Blue Owl Capital stock analysis. Now, if you don't know what Blue Owl Capital does, it is a large alternative asset manager. Now, if we take a look at the stock, we can see ever since January of last year, it really hasn't been fun owning this stock, as it simply just has been a downwards trajectory for quite a while. And especially recently, given the fact that private credit is in such a slump, sector-wise, it is quite poor. So if you don't know, Blue Owl Capital does a ton of private credit, which is also the reason why it has been falling so much lately. Now, if we take a look at the RSI for this period, we can see it is quite poor. So if you know what RSI is, that is the relative strength index. So if something is between 50 and 30, it's in the lower channel down here, meaning it's trading downwards. If it's below 30, that means it's oversold. That's when it's falling rapidly, like right here. If it's between 50 and 70, it's in the upper channel. That means it's rising slowly. And if it's above 70, it means it's rising rapidly. So overall, it is in the lower channel for quite a while. Now, we don't see it being oversold a ton, which is quite great, as we much rather would prefer slowly and sure descent than just absolutely just falling. Recently, however, it has been quite poor. In a few days, we see it going from golden cross to death cross a ton of times and then falling quite hard. Back in January of this year, it's on 16 bucks, and now it is in 8.74. At the moment, it really is quite volatile, but that is simply because the entire sector is under quite a lot of pressure. So if you are in this sector at the moment, I would keep my eyes peeled if I was you. Now, if we take a look at a one-day candle graph, just take a look at this. So it has been quite a volatile stock, especially recently. In the beta, we also see this as we have a beta of 1.72, meaning the stock is 72% more volatile than the average index. Now let's just make the candles an hour again. If we go into the earnings, we can see some of the earnings are great, some are poor, but overall really nothing to be too scared of. And we see they also pay out dividends. We can see that right here from 2020, and they have been increasing dividends slowly but surely, and this is quite nice. Now, before I go into the overview of the stock, I want to show you something. So if we take a look from their Q4 of 2025, we can see some of their portfolio. So their portfolio size is 16.5 billion. Their portfolio has 234 company entities, and their portfolio EBITDA is 237 million, and their debt portfolio yield is 10%. Overall, this is one of the reasons why I'm not quite scared for this huge private debt fall. And this is actually one of the reasons why I like Blue Owl at this price quite a lot. Now let's get back to the stock. Now, one of the reasons why I like this stock quite a lot, I'm going to show you right now. So the market cap of the stock is 13.5 billion. So it is actually worth less on the stock itself than they own, which is quite amazing if you want to buy it. Now, I don't own any of it yet, and the reason I don't own any of it is because I think it's going to fall even further because the private credit is so poor at the moment. But the reason that private credit is in such a hole, we can also see that in the volume. So, of course, because Blue Owl is so large in private credit, the volume in the stock has absolutely exploded. Now, what volume is, it's how many shares is traded each day. So we can see recently it has absolutely exploded. Now, it is falling a bit again. We can see that right here. For example, in the last 30 days, we had an average volume of 400, not 400, of 40 million shares, but today it's only at 19.62. Overall, the volume isn't really that large as it used. The volume is much closer to what it was before this private credit went downward. Chances are it's because we're seeing a lot of shorters in the area right here. Now, if we go into the overview of the stock, we can see the market cap is 13.5 billion. They have 3.8 billion in debt, and they have 3.8 billion dollars in minority interest, and in cash they have just below 200 million. So overall, quite decent to be honest. Now they have 1,300 employees, not that bad, and we have quite a lot of free float and not that many closed shares, which we like quite a lot. If we look at the price to sales and price to earnings ratio, we can see it fluctuates quite a bit. Now the price to sales is relatively the same, and so is price earnings, even though the stock price has been falling quite a lot. Now if we look at how the revenue is made, we can see a ton of different areas in where they make their money. But what we need to focus on is this credit direct lending. That is how they make the bulk of their money, as well as this right here, GP strategic capital or GP minority stakes and so on. So they have a ton of different sectors in where they make the money, but in the large total, it is just they're lending out money to different kind of companies, and then they're reaping the rewards of that. Now, where to do it, they do this in the United States alone, so no other countries at the moment, but I wouldn't be surprised if they started looking outside of the United States in the future. Now, if we go down here and look at their seasonals from 2020, we can see some years are quite great and some years are quite poor. We had last year down by 30%, This year down by 42.9%. We have some years like 2021 up by 36, 2023 up by 47, and 2024 up by 59%. So currently it is quite cheap. I don't actually think it has been cheaper at any point. Let me just make it a day again. It has been cheaper very few times, but that was for quite a short amount of time. But overall, it is very, very cheap at the moment. And personally, I'm just waiting for this trend to reverse. So I'm waiting for the RSI to go a bit more upwards and to see some better not RSI, some better SMA lines, or maybe even a golden cross, because I would rather buy a bit more expensive and then have the technicals with me. So if we take a look at the technicals, for the day they're a sell, for the week they're a sell, and for the month they're a strong sell. This means if we take the technicals into consideration, we shouldn't buy this stock at the moment. So when this turns, I'm definitely going to buy up in this stock because I think the private credit risk is quite overblown, and because Blue Owl Capital doesn't only invest in AI companies, as some people have been saying online, which is plain wrong. Now, if we take a look at analyst rating on it, we can see they're quite great. We have 5 hold, 1 buy, and 11 strong buy. Some even think it can go up by 197% within the next year. I think that's a bit much, but going up to 17 or say $15 wouldn't surprise me at all. So up just below 100% wouldn't surprise me at all. I think this is a huge overestimating in how big the private credit risk is at the moment because of what is happening with BlackRock. If we take a look at their estimated EPS, slowly but surely increasing, which is something we absolutely love to see, as well as in their revenue, slowly but surely. So Blue Owl Capital is a great company, and they're backed by companies like KKR and BlackRock. So I am definitely not scared of this company going down under, to be honest. So in my own opinion, I like this company quite a lot, and I'm definitely gonna buy in it. And my price point with the 1 year, let's just say it's $16. If you like this video, please don't forget to leave a like and subscribe. And of course, remember this video is only for entertainment and educational purposes. But if you want to see more videos like this, please don't forget to leave the company to analyze in the comment section below.